When most of us think about a bank, we probably picture depositing a check or maybe taking out a loan. But the banking system is so much more than that. It's really the circulatory system of the entire economy, pumping capital to businesses, to families, and to brand new ideas. So today, we're going to pop the hood and see exactly how this powerful engine works here in India. Okay, so here's how we're going to break this all down. We'll start by mapping out the players on the field with India's banking blueprint. Then we'll get to know the referees who set the rules of the game. After that, we'll dive into the huge challenge of bad loans, see how that crisis actually sparked a digital revolution, and finally, we'll look at what's next, the future of banking in a fully digital world. All right, first up, let's get the lay of the land. Before we can understand how the system works, we've got to know who the key players are and what they're actually doing out there on the field. At its very core, the whole system is built on this really simple but incredibly powerful idea. An idea that was defined way back in 1949. A commercial bank takes in deposits from people like you and me, and then it lends that money out or invests it. That's it. That's the fundamental business model, using public money to create credit and, hopefully, earn a profit along the way. But here's the thing. It's not just one kind of bank. The Indian banking system is this amazingly diverse ecosystem. You've got the huge government-owned public sector banks, the more nimble private sector banks, and then a whole host of specialized players, each one designed to do a very specific job in the economy. And this diversity isn't just for show. It has a real purpose. Just take a look at the regional rural banks, or RRDs. An incredible 92% of their branches are located in rural and semi-urban areas. Think about that. They are the frontline soldiers in the battle for financial inclusion, making sure that banking services reach the most remote corners of the country. Okay, so with all these different players on the field, how do you keep everything in check? I mean, without a strong rulebook and a powerful referee, a system this important could get pretty chaotic pretty fast. And that chief referee, no surprise here, is the Reserve Bank of India. The RBI is the big boss. It sets monetary policy, manages the country's currency, and, most importantly for our chat today, it supervises and regulates every single bank to make sure they're playing fair and not taking wild risks with our money. But that brings up an even bigger question, right? How do you make sure that banks, not just in India, but all over the world, don't get reckless, take on way too much risk, and just collapse? It's a question that keeps regulators up at night, especially after what we all saw in the 2008 global financial crisis. And the answer really lies in something called the Basel norms. You can think of these as the global rulebook for banks. They set out exactly how much capital a bank needs to keep in its back pocket for every loan it gives out. It's basically a financial shock absorber. The more capital a bank has, the bigger a hit it can take in a crisis without going under. Now, even with the best rules in the world, things can still go wrong. And for the Indian banking system, the last decade has been defined by one single massive challenge: the problem of bad loans. It's a simple question, but it has some really complex answers. When a borrower just stops paying back their loan, it kicks off a chain reaction that can seriously hurt a bank and even the wider economy. And this brings us to a term you've probably heard 1,000 times: NPAs. An NPA, or a non-performing asset, is just the official term for a loan that's gone bad. If a payment is overdue by 90 days, that loan gets tagged as an NPA. And for the bank, that's a huge problem, because an asset on their books has suddenly stopped making the money and has turned into a major headache. Now, for years, the true scale of this problem was kind of hidden away. But in 2015, the RBI launched a massive deep dive called the Asset Quality Review. They basically forced the banks to open their books and be honest about all their bad loans. And what happened? The official NPA numbers just shot through the roof. It was painful, for sure, but it was necessary to see just how much stress the system was really under. So to clean up this massive mess, the government rolled out a comprehensive plan they called the 4Rs strategy. First, recognize the problem transparently. No more hiding. Second, resolve and recover the bad loans using powerful new laws. Third, recapacitize the public banks by pumping in fresh money. And finally, and this is the crucial part, bring in systemic reforms to make sure this doesn't happen all over again. Now, this is where this story takes a really fascinating turn, because, as they say, every crisis creates an opportunity.
All that strain on the traditional banks, combined with India's absolute explosion in mobile phone use, created the perfect storm for something totally new to emerge: financial technology, or what we all call fintech. And when I say this digital shift is big, I mean it's almost impossible to wrap your head around. Just look at that number. That's the value of digital transactions in a single year in India. This isn't just a trend, it's a fundamental rewiring of the entire country's economic plumbing. And the undisputed king of this new digital world is UPI, the Unified Payments Interface. I mean, it's not just a player, it is the game, accounting for a whopping 81% of all digital payment transactions. It has totally transformed how people in India pay for everything, from a cup of chai on the street to their monthly bills. Fintech is also shaking up the world of lending, and too many models have really taken off. On one hand, you have the direct lenders. These are licensed NBFCs that lend out their own money and take on all the risk themselves. Then you have the lending service providers, or LSPs. These guys are the tech platforms. They don't lend their own money. They act as a high-tech matchmaker, connecting you, the borrower, to a traditional bank. All of this, the crisis, the cleanup, the tech explosion, it's all leading us to a pretty radical question. What even is a bank anymore? We're moving beyond just slick apps and into a conversation about a whole new blueprint for banking itself. And this isn't just some fringe idea. A major report from India's top policy think tank, Niti Aayog, got straight to the point. It argued that a lot of traditional banks are stuck with inefficient models, and that creating a new category of fully digital banks could be a powerful tool for achieving major national goals, like boosting financial inclusion. This gets to the heart of what's being proposed. Right now, most of the neobanks you might use are really just a fintech company with a great app that is partnered with an old bank in the background. They're borrowing the license. The big idea is to create a brand new license for a full-stack digital bank. A bank that's digital from day one, with its own license, its own modern tech, and the freedom to build new products from scratch. So why go through all this trouble? What's the grand prize? Well, it's enormous. The main goal of this whole idea is to solve one of the biggest problems in the Indian economy: a massive 25 trillion rupee credit gap for small businesses. These are the businesses that form the backbone of the economy, but they always struggled to get loans. The hope is that these new digital banks can finally bridge that gap. So, we've gone from these grand old physical bank branches to a simple function inside an app on our phones. The transformation has been incredible. But as we look to the future, it leaves us with one last really interesting question. As banking becomes less of a place you go and more of something you just do, who really holds the power? Is it the old guard of traditional banks, the new tech giants? Or does this whole revolution ultimately put more control right back into your hands? That's the real story we'll all be watching.